What's going on, YouTube? Today is day number 7. 1, 2, 3, 4, 5, 6, 7. Yes, of the $1,000 account challenge. And today we are up $39 or 3.44% in the account, bringing our total balance to $1,176. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. And like I said, today we are on day number 7. We took 3 trades today. All 3 trades wound up being green. In this video, I'm going to show you those 3 trades, walk you through why I took the trades where I did, and then walk you through the alerts that I put out to lead my team into taking these trades as well. So you know where we began. Day trade watch list posted before market open. AMD was a long idea above $131. Now, if I go to the alert room before the market even opened, I said, other than that, right, posted 9:23 a.m., AMD will be my top stock pick long if that breaks out. AMD will. So I already knew going into the trading day where I wanted to potentially place my trades because it was such a quality setup, such a good setup. So let's break it down. AMD opens up. Here's 131 right here. We have a trend line drawn there. Remember, straight off of the day trade watch list, that's our trigger level to take the stock long. But it opens up and dips and drops down to the previous day's closing price. So I'm looking at this as a potential green to red move, maybe to take this short. But what I recognize is that on the 5-minute time frame, the stock actually dips down to the previous day's close and holds it as support. So it starts to get bought back up. That's what this bottoming wick tells you. It's telling you buyers are stepping in, seeing this as a dip opportunity, and buying the stock back up. So utilizing the trend line break strategy, which is a method that I teach, and it's also on YouTube here. It's called the trend line break strategy. Utilizing that trend line break strategy, I was able to lead my team into taking an entry well before the break of $131. So we get the break of the downtrend trend line right here and the reclaim of that trend line, the bounce off of the previous day's close, and we're straight into consolidation. Now, if you don't believe me, here's what I posted at 9:38 a.m. You can see the chart, so how it looked with the break of the downtrend trend line right here. I'm alerting it on this candle, how it looked versus how it went. Right? I said AMD worth watching here for a trend line break and higher highs. So I'm literally telling you in real time what I'm seeing. Then I tell you that on that same minute that I've loaded the call contracts. So again, well before the entry, I'm loading the contracts, no position yet. I may go long on a dip with low of day as a stop loss. So here I'm looking at this as a potential move up. I was looking for a dip entry around the previous day's close, honestly, so my risk off level would have looked like this, and my potential reward up to the high of day or up to the trigger level would have looked like that. So again, just the amount of reward here potentially offered versus the amount of risk was double. It was over double. But we didn't wind up getting the entry at the previous day's close. We had to take the entry a bit earlier. So I'm watching this consolidate, and then I see this volume coming in and the stocks start to push up. And I'm like, you know what? I don't think that this is going to dip at this time. Let's go ahead and take the entry here. That's at 9:44 a.m. So the alert comes out, 9:44 a.m., time stamped. AMD took the entry. I remind you of the contracts that I was looking at, right? So same contracts as above, reminding you there. I give you my exact fill price, and this time I say my stop loss is a break below the previous day's close. So originally I wanted to stop out at low of day, but because we took the higher entry, we need to move our stop loss up just to continue to mitigate that risk, right? Stop loss is a break below the PDC. So our entry here, stop loss is there, potential reward up to the high of day or the trigger level is there. Again, just that amount of reward versus the amount of risk assumed, still about double there. And that's how you want to be taking your entries. Okay. So we do get the move up, now up over 10%. You can take your profits or hold. I'm just walking you through the trade. That's literally 1 minute. 1 minute later. Then I said my sell target's 97. So I'm giving you the sell target, now up 16%. 9:46 a.m. Closed the trade out there for a 20% gain. Remind you of the contracts. My fill price was 81.81. Exit price 97, just like I mentioned right here. So 9:46 a.m. That's going to be right there. 20% gain. Now, why exit there? Well, because the stock was already extended from the low of day, and I'm thinking it could hit 131. We know that's a trigger level, and reject, right? It could also reject at the high of day. So that's 2 reasons, and we were up 20% already. That's 3 reasons to take the profits there when they were offered. Now, I didn't scale out on this trade because I didn't have multiple contracts. Right now, in the beginning of the challenge account, it's not about making a lot of money. It's about building the profit margin. So because I don't have a lot of contracts, because I'm not using a lot of capital, I don't necessarily have the ability to scale out of trades the way that I would like and let things run, right? So later on in the challenge, as we progress, if we continue to grow the account, we will move into taking larger gains. But for right now, it's all about building a profit margin. The reason why we do this is because we know those losing trades are coming, right? We know those red days are coming. What we don't want to happen is us have a red day or a losing trade that drops us back below our initial investment of $1,000. So we're trying to grow this account, build this profit margin up so that when we do take those red days or those losing trades, we have enough profit margin built to where, again, we just don't dip down into that 1K initial investment. So we're not done with the trade here, right? We take the profits at 20% and we let this run. It runs a little further without us. I think some members let their positions run and wind up taking I believe somebody got like 60% on this, which is fantastic. I'm scrolling through the profits here. It would have been maybe... Let's see. Yeah, a lot of there we go. Yeah, Rodrigan, 60% on AMD long. So they definitely held through on that first entry. Fantastic job, by the way. So we get the run up into the high of day, break of 131. Now we've got breakout confirmation above the trigger level. So what we don't do here is chase the move, right? We don't try to go long on the first dip. We don't try to chase the move and buy it up at the top. We're not market buying on the initial break of 131. If this is to continue on a pullback, it should hold 131 as a point of support. So let's walk you back through that trade into the alert room. AMD still on watch, lots of green back to back, right? But wait for a dip entry before taking the long entry again. So I'm reminding you at 950, which is going to be here. As this is running, I'm saying that's a lot of green back to back to back, right? Surely this thing is not going to just continue to go green forever. There's an ebb and flow in the market and in stocks. So it's most likely going to pull back, and it does. So we wait for the dip. I remind you, or actually tell you, I'm loading different contracts because the 136 calls that we had earlier, they were increased in price. So we loaded different contracts just to make sure that we're still mitigating our risk. AMD loaded. AMD, my plan is to take this long on a dip. I give you the contract reminder again, stand by. This is at 9:51 a.m. So as this is starting to dip, I'm telling you, I'm looking to take it long on a dip. AMD 9:55 a.m. took entry long. Remind you of the contracts, and I give you the exact fill price of those contracts. So 93 cents there. Here's 9:55 a.m. the dip down to the trigger level, and that's our entry. Now we get the run up to the high of day. I wound up taking, this candle was green at one point. I wound up taking my profits here at a 10% gain. And again, just the reason why I'm doing this is because I'm not affording myself the ability right now to scale out of trades and to let runners run. I'm just building that profit margin. So that is my entire reasoning for taking profits at 10% here. And I missed out on a lot of profits topside, but that's okay because you will always and forever miss opportunity in the market. And it's very rare as a retail trader that you catch the very bottom of a move all the way up to the exact top. So we have to be content with what we have. And we're still achieving our goal of building profit margin by taking profits at 10 to 20%, anywhere in between that range. So as the stock rallies up, let's look at the timestamp. 9:58 a.m. closed AMD long for a 10% gain. Exit price at 103. I closed it early due to high of day. So I saw the resistance here near the high of day. Thought it may potentially reject or chop or move sideways. So I went ahead and took my profits there at 9:58 a.m. at the top of this candle, not at the bottom. Now we weren't done for the day, right? We moved over into a trade on Apple. So we'll go back to the day trade watch list. Apple was a short idea today below $194. So here's your chart for Apple. Here's 194 is actually up here. But I did put out in the alert room because of the pre-market drop, we had to adjust. Let's go to day trade watch list. I said Apple adjust the short trigger to 192. The reason why we did that is because this dropped below 194 in the pre-market. So here's 194. It dropped below 194 early in the pre-market. So we adjusted our short to 192. Now I still took the entry prior to the break of 192. Why? Well, because this was a pattern that was shaping up known as a bear pennant. So there's your pennant formation. Here's your initial drop. So we were looking for the continuation drop that's going to be higher lows and lower highs all converging to a point. Once we got the lower low below the break of the pennant pattern, I went ahead and took the entry short, even though we had a earlier entry than the break of the trigger level. Okay, so the pattern breakdown is why I took this trade, not necessarily basing it off of the trigger, but rather the intraday price action and what I'm seeing in real time. So time stamping this entry over in the the alert room here. We're going to scroll down. Apple took entry short 10:09 a.m. I give you the contracts, I give you the fill price, I give you the stop loss. 192.6 was my stop. So here's my stop loss, 192.6, timestamp entry at 10:09. That's going to match up here at 10:09 a.m. So again, just the amount of risk assumed up versus the amount of potential reward down to 192 down. This is going to be your reward amount. This is going to be your risk. Oh, sorry about that. This is going to be your risk amount. And notice again, it's just double. Right? This is how we take the low risk entries. They're still risky entries. You're always going to assume risk when you take trades, but their amount of risk assumed versus the amount of potential reward is worth the amount of risk. So we take the entry short right here. It's just trade management from here, guys. Move down into the low of day, wound up taking the profits at 192 out of Apple short for a 10% gain. Entry 77, now at 85. That building that profit margin, that's 3 for 3 today. So again, just taking that taking those profits at 10% to continue to build that profit margin. Plus, we know 192 at that time is a potential support point. So the alerts that I gave in between, I kind of want to walk you through this because initially I had a hard stop placed at 69 cents and the entry price was 77. So it was about a 10% stop out. Then I tell you my sell target at 85. Then I'm moving, as this is falling, I'm moving my stop loss up. So move stop to 72 for a 6% stop out because I knew I was aiming for 10% profit. So I want that profit amount to be double the amount of the stop loss. Then I move my stop to break even. So at this point at 10:13 a.m., which is right here, either this trade is going to give me a 10% profit or I'm going to stop out at my entry price at a break-even price. So the only thing I would lose there in that trade is commission and maybe like a 1% slippage. So and I tell you that too. Either this trade gives me a 10% profit or I wash out at break-even and we wound up taking the profits. Okay, so a lot of information coming out on this video. What you get to see from this video, and I hope that maybe you took notes, at least mental notes, is how we take the entries prior to the trigger level breaks. So we are kind of breaking the rules, but we're basing it off of intraday price action. So with the Apple trade, we're basing the entry off of the intraday price action being the pennant pattern, the bear pennant pattern that we see that's breaking down. So in this scenario, we didn't need to wait for this to break down below 192. And then AMD, the situation here, is the trend line break strategy, right? We see it hold the previous day's close. We see it start to bounce. We see it moving into consolidation. We see the volume coming in to take the entry long. We see the higher high starting to print. We don't necessarily need to wait on this to get to 131 because we already have multiple confirmations here that it's moving up or starting to move up, right? The break of the downtrend trend line, the bounce off the PDC, the consolidation, the volume, the higher high. All of those serve as confirmations for us to take the entry prior to the trigger level break. And that's the main thing to take away from this video. Okay, cheers. I hope that you enjoyed the content. Press that like button for me if you haven't done so already. It's the best way to support me as a creator and this type of work that I do. And if you haven't done so, also subscribe to the YouTube channel. I post these trade breakdowns pretty frequently. My hope is to continue the 1K account challenge and post a video for every single trade. Enjoy the rest of your day. Thank you for watching, and I'll see you in chat. Take care.